Good afternoon, everyone. Thanks for joining us on a Friday afternoon. I really appreciate it. We have with us today Ashley Bell. Ashley is the Region 4 Administrator for the SBA, so he's in charge of 8 different states, including Florida. He's also the Entrepreneurship Policy Advisor for the White House Opportunity and Revitalization Council. Ashley, as you know, has just been a busy man over the last few weeks, and we really appreciate his time. He's going to share some insight for business owners on the Paycheck Protection Plan or program, and then he will be able to answer your questions that you have for this program. So please submit questions below in the questions tab, and we'll get to as many as we can. Ashley, thank you again for being here with us, and I'll turn it over to you.
Thank you so much for that introduction. I really appreciate you putting this together in the Jacksonville Chamber. And, you know, this is just a testament to how important our chambers are. And I hope that all the members of the chamber understand that, you know, these sorts of seminars and webinars are critical, because this is where you can come to get credible, accurate information about the programs that are very essential and vital to your business. So, you know, this is definitely worth the price of the membership and then some. As somebody who's been a member of a chamber since I was 20 years old, when I opened up when I thought about opening up my first business, one of the first things I did was try to reach out to my local chamber. And it has been an extraordinary asset to me along my journey as being an entrepreneur. And I continue to look to chambers like the Jacksonville Chamber to help me understand and better understand the economic implications of federal policy, ways that we can be more responsive. And in my role as policy advisor to the White House, absolutely, the chambers are the first place we stop when we're trying to understand how the policies we propose benefit and how they may create challenges for small businesses and business in general. So, you know, I've had a chance to visit the Jacksonville Chamber. Before all this hit, we were knee deep in trying to push some Opportunity Zone efforts, and now the White House Opportunity Revitalization Council, which governs and runs our Opportunity Zone program, is pivoted completely, and that pivot is now more of a recovery effort, a Get America Back to Work effort, and that is it has put SBA, my home agency, in where I serve as your regional administrator, at the forefront of this process, at the forefront of this bipartisan effort to create incentives and to create programs by which we can save our economy, and we can help those businesses out that we've asked to make certain decisions in the name of protecting public health. And those decisions, as you know, have been social distancing, have been asking people not to gather, not to congregate. And those decisions, whether it's your mayor or your governor or the president of the United States, asking you to do that, to close your doors, have severely altered the way many of us do business. There's not a business in this country that has not been affected. And I think that has created a tremendous demand for relief and support. So that's what we'll talk a little bit about today, and I'll answer questions to that. So when we talk about the CARES Act and the purpose of the PPP program, I want to start there, because I think if you understand what the president and what Congress was trying to do in proposing this bill, you'll understand sort of how the rules ultimately always play out, because they will always play out to this ultimate goal. They will follow some logical order to this ultimate goal. And the ultimate goal is to most immediately get people off of unemployment, to get people a paycheck, to allow them to have money in their pockets to spend, put it back in the economy to pay taxes with, whether that's payroll taxes, school taxes, local, state taxes, to do that immediately. And the goal is that, you know, when you ask people to stop gathering, it was anticipated that we would have tens of millions of people who would be unemployed. So this is the government's effort to flatten the curve of unemployment, to lessen that number, to bring it back down precipitously by bringing on businesses into the framework of this PPP program, to allow them to have 8 weeks of paid salaries for their employees that make under $100,000, which is a vast majority of America's businesses. But as you know, over almost 90, when you look at small businesses, over half of America's workforce is small businesses. Most of the numbers of businesses in this country, over 90% are small businesses when you're just counting just the pure numbers. And the PPP program, as we know it, the first round was a couple things. It was successful overall. SBA was able to lend out in 14 days, which was the length of time of the first PPP, the same amount of money that we had lent out in 14 years. And so that's a tremendous, tremendous lift of an agency that is small, an agency that in theory served all 30 million America's small businesses, but really only actually had to service several 100,000 a year. Actually, we would probably only service, well, that's just in my region, but nationally, probably 3 or 4 million a year would need assistance from SBA, not the full 30 million. But today, all 30 million need help. And then, so the first round of PPP was able to expand outside of those, 30 million, which is an astronomical number, especially when you're only serving 3, 4, 5 before, to also include, as you know very well in Florida, our disaster component, which those rules allow SBA overall to also serve nonprofits. So now we're also serving nonprofits on top of the 30 million. So every nonprofit in the country who's under 500 employees is also now eligible to get served. And then under the leadership of Vice President Pence and our administrator, David Carranza, the SBA made a determination that this virus is not only affecting our small businesses and our community, but also our culture, who we are, and the ties that bind us together in good times and bad, and those many times revolve around our faith-based institutions. And because of that, SBA decided for the very first time in the history of SBA, the faith-based organizations, churches, synagogues, mosques, everybody will be eligible for funding through this same program. So now everybody's on a level playing field, whether you own a restaurant or you're a pastor at a United Methodist Church, or you are a drug and rehabilitation nonprofit that focuses on helping people find a way out of addiction. Everybody's on the same playing field, whether you're nonprofit, for-profit. So that's a huge amount of people that SBA has been tasked with supporting. But in the last round of funding, Florida alone received an injection back into Florida's economy of over $18 billion through the PPP program. That's $18 billion of which people were putting back into Florida's economy, making sure that people were employed, they were getting a paycheck, that they were allowed to take care of their families, to keep food on the table. And that include whether or not, like I said in the beginning, it goes back to, we got to lower unemployment, because at the end of the day, your church secretary, if you let go of your church secretary, she's filing unemployment. If you let go of your employees at your computer software company, they're filing unemployment. If you let go of your employees at your drug rehab nonprofit, they're filing unemployment. So all of these people, no matter how you classify the business, they all had employees. And I think that was the goal of this, is to anybody with employees, we want to make sure that they're still employed. And most importantly, when this is over, they have a job to come back to, because we gave you, there was enough incentives given, because we've asked this ultimate sacrifice to shut down, to stop and pause your dreams that you created through your businesses for a short period of time, so that you can be a part of this great recovery effort as we survive the greatest health crisis we've ever had in this country, and probably the world. So when we look at that, and we look at now we're at round 2, what lessons did we learn from round 1? Everybody knew that round 1 was going to have some challenges, and those challenges were resolved primarily around micro businesses. Micro businesses, as you know, are those businesses that don't have a lot of employees, many none. And many times you find in minority communities, and specifically if you look at the African American community, only 93% of African American businesses have no employees. They're people that could be multi-million-dollar businesses, but they 1099 everybody that can, and are there vendors that are 1099 themselves, independent contractors. So when you look at those micro businesses, the ones that are just incredibly important to our community, they had the bulk of the burden, because the way we had to roll it out, the rules for them were not released until April 10th. The rules for everybody else on April 3rd. So by the time that you got to April 10th and you were eligible as a micro business to even apply for PPP, you had 4 business days to get it done, because the funds ran out right after that. So what do you do to reach those people, especially those that, you know, are struggling to find a bank and don't have banking relationships, typically speaking? And I think what we learned from this last round is that the bigger banks prioritized, which they have, you know, they have a right to do. I mean, people can be upset about how they did it, and that's valid to definitely criticize, you know, the method in which they applied who they were going to support, because there were a lot of people who banked at these big banks and you know, have been there for years and just could not be a part of this program for whatever reason. The bank chose not to support them. So now you have a avalanche of people who never would have thought that if they've been banking at a big bank for 10, 15 years, that in a crisis like this, that banking relationship should hold and should put them in a position to be a part of this recovery. So now they have to figure out where they're going to go. So we have seen a massive, massive migration in this country of people looking for and supporting small community banks. Credit unions have been incredibly important. And as of today, especially in Florida in particular, CDFIs, CDCs have now received additional liquidity through the Payroll Protection Liquidity Fund, which has allowed them to leverage more dollars. So all these things matter this go around, because we were able to take this next stack of funds that came from the CARES Act and take $30 billion of that and say, all right, well, these $30 billion are going to be dedicated to to banks, to banks that have under $1 billion worth of assets. So that gives us a chance to say, all right, let's make sure that the small banks have their own pot of money so that they can apply that liquidity to the small businesses, the micro businesses, the communities where they are. That way the large banks just can't come in and dump 100,000 applications on the system through an automated robot service and the money's gone. And then everybody else is left to figure out what next. So by separating $30 billion for banks under $1 billion, by separating another $30 billion for medium-sized banks, which are banks under $10 billion, we saw, and then on top of that, creating a system that does not allow the big banks to just come in and dump 150,000 applications an hour and eat up the money. We're forcing them to slow down on their ability to process at a pace that is, you know, commensurate with what the small banks are able to do. And by doing that, the small banks have actually, at this point, outpaced the big banks as far as producing payroll protection loans. So, you know, right now the small banks are carrying the day. And I think when I talk about this to people and I say, well, you know, what's the best thing you can do if you have not received funding yet? And I think it just goes back to the big banks not being able to extend this program to all of their business customers. If your bank has not reached, if you applied at your big bank and they have not talked to you, you have not talked to a regular person, not a robot on the phone by now, you need to go find another option. And what we've done is empowered every district office. And so I've asked every district office under my region, which you are in, to get on the phone with every single banker in North Florida and say, we got a couple questions for you. We need to know if you're participating in this program. We need to know if you're accepting new clients, meaning that we all know that some of these banks want you to join, to be a new client before they work with you. Ask them, are you requiring people to move their money to your bank in order to participate? Asking them, do they accept sole proprietors, micro business owners, independent contractors? Asking them, do they support the applications of faith-based institutions as well? So by asking them these questions, your local district office located downtown Jacksonville is going to be able to help you find and link you with someone who can actually be of service, someone who can actually say, all right, well, yes, I can do that. And then we have that component to, at this point, help out those micro businesses that just may not have all their stuff together. And I know a lot of people say, well, Actually, got a micro business I just been managing. I pay my bills. I do everything I got to do. But I can't really show how much I make. I don't even pay myself. I just pay everybody. Whatever's left is what I got and how I live. And that's a legitimate experience and a common one of the hardworking sole proprietors that we have around this country. And a lot of them don't even have CPAs. A lot of them don't even have accountants. And it doesn't mean their businesses are small. I'm not saying they're micro to be anything other than talk about the fact they don't have employees, but many of them are making a lot of money. They're just the way they chose to set up their business. But now that becomes a hindrance. Now it becomes, how do I show that I need assistance because I run my business this way? So this is where our small business development centers are important. This is why we have at the University of North Florida, we have our SBDC, our Small Business Development Center there, because their role is to help you fill the gap. Their role is to help you understand how to tell your story to the bank when you go for a PP loan. How do you tell the story of a sole proprietor that just writes off everything they can and they show what's left? And so to that end, they can help, take your taxes, look at your net income, divide that up by 12, let them, work with you to fill out the application so the banks know that this is technically what you're showing. Multiply that times the same multiplier that any larger bank with employees would recommend. And therefore, you can participate in this program. And I think once we can get the word out, great webinars like this, if we can share it with the folks that need it, and we reach those businesses that are small, then I think we'll be on the right track. I think that right now, we still have banks that they're accepting. There's still money in the system. I think, we outpaced everybody's expectations. People thought the money would be gone by now, but it's not yet, because we slowed the system down and made it so the big banks just can't swoop in and dump a bunch of applications for a bunch of money. And under the leadership of Secretary Mnuchin, our treasurer, has started to audit any application.
Are you there, Ashley?
They have.
There you are. I think we lost you for a second there. Are you back?
Yeah, I'm here.
Okay, cool. Sorry, I think it cut out for a little bit.
Sorry. Well, I said that with that said at the end, I opened it up for questions. I said that we fully expect that small banks, the story will be told that small banks helped out small businesses, and our economic recovery will be just as quickly as our decline. So with that, I want to open it up for any questions you may have.
Thanks. I really appreciate that. Here's a few questions that we've had here. So, and I know you touched on this a little bit, but how was the second round of the Paycheck Protection funding different than the first?
Process-wise, it's the same. Rules-wise, it changed some for some people. There were some affiliation rules that were augmented a little bit. There were some rules that allowed some institutions that do have gambling to participate a little bit more, not totally, but they did loosen some restrictions on gambling institutions there, did loosen some affiliation issues there. So there was tweaks to the eligibility requirements, but overall it's the same program. I think the biggest lift that we were able to do to make sure that we serve more Americans is how we allocate the money by splitting it up into 3 or 4 buckets to make sure that smaller institutions had a better shot at receiving enough access to the resources to deploy into the community.
Okay. And have you seen that, you mentioned the $30 billion for banks with less than $1 billion in assets, and then another 30 for less than 10 billion in assets. Have you seen at the SBA that money is reaching the businesses that you were looking for?
Yeah, absolutely. I think that the numbers that we're seeing show that the small bank pot of money is exhausted, and now that money the smaller banks are actually, we've allowed them to take away from the pot allocated for larger banks. So we're seeing it at an astronomical rate, and we're continuing to make sure that the small banks have the access they need, because we see that they're really creating the results that everyone's looking for.
Great. We've had several questions on this issue. Can you talk briefly about the process for forgiveness?
Right, and here's the thing about forgiveness, and what's important about the way the president wanted to structure this is to make sure it was a true public-private partnership, and that the banks were able to have the flexibility to deploy funds quickly, which is why it's, the banks are lending their money to start off with. And so we knew that in order to tell the banks, hey, we're going to let you, send out all this money and we'll pay you back, you had to be very clear about how that was going to work. And so the bank is the sole person, sole entity that is going to determine two things: eligibility and forgivability. At the local level, the bank is making the call on who's eligible. SBA has done a complete delegation of authority to these banks once they've met our criteria, signed our agreement, and basically said, you're determining who's eligible according to our rules, and you're determining who's forgivable, which loans are forgivable according to our rules. You do not have to come to SBA to ask us, is this person forgivable under this rule or that rule? We are expecting you to do that. And if you make a mistake, we're going to hold you harmless. We had to make these delegatory actions to entice banks to even want to be on the hook for this type of money. And so the key for forgivability goes back to what I originally mentioned as far as the mission of this legislation, and that's to make sure people have a job and a paycheck that they can bring home to their families and take care of those they love. And to do that, if you take out this loan, you're going to have to promise to the federal government and to your lender that you're going to keep people employed. And so there's some stipulations around that. Let's say you have 5 employees and you decide to let go of one of them and don't replace that person. Well, if you already took out the loan and you did it under the equation of having 5 employees, then you're going to have to pay back some of that money, and it's not going to be forgivable because you didn't use that money for that 5th employee. But let's just say you wanted to rearrange your business model a little bit and give everybody a 10% haircut. That's fine. You do have some flexibility to lower wages if that's what you want to do. Or let's just say, let's use round numbers to make it simple. If you have you took out $100,000 loan, $75,000 of that has to be used towards employees. The other $25,000 can be used for other expenses such as, utilities, insurance premium, mortgage. Forgivable. Now, if you deviate from that, meaning that you do not spend 75%, and let's just say you let somebody go, and so now you only spent $60,000 on employees. So that means that differential, that $15,000 differential between the 75 you should have spent and the 60 that you actually did, that part now is not forgivable. So now you have converted that $15,000 into a low interest loan with the bank that holds your note. And now that bank has a loan with you for $15,000 with a 2-year maturity rate at a 1% interest rate. So the key is spend it on people, keep the ratio, and don't spend it on things that are prohibited, and then your loan is forgivable.
Okay. And just one little variation on that was a question that we had. So can it be used for new employees, or is it just bringing back the same people that were furloughed because of COVID-19? So I think the scenario that the person was referring to is if they furloughed employees, let's say they had 5 employees and they furloughed them, and then they wanted to bring 5 back, but one of them got another job and wasn't available. Could they use that money to hire the same 4 and then somebody else? Or does the person have to have been on the payroll prior to the pandemic?
And that's a great question. And that scenario, you're exactly right. The FTEs are the part-time employees that you have on your staff, that number that you're basing your loan off of. They have no name. They are faceless to the system. So that means if you have 5 when the loan starts, you got to show that you've had 5 on payroll when the loan ends. And it doesn't matter who that is. You can fire somebody, you can let somebody go, you can furlough them if necessary. But if you got to bring back a new person, as long as that new person is reaping that benefit, then you're fine.
Gotcha. So it's employees. It's just the number of employees is what counts, not exactly who they are.
Yeah, it does not count who they are. There are no names
Okay.
attached to the count.
Gotcha. Thanks. That's really good information. One other question I know that somebody had. So how is a FTE calculated? Do you know what the minimum hours are for that?
Yeah, so it doesn't matter. It just includes people. So they can be part-time. So there are no hours calculations.
Okay, great. Is the prepayment of health insurance expenses allowed?
If the health insurance is being calculated as part of your benefit to your employees, yes, absolutely. It can be included in the forgivable portion of the loan.
Okay, great. We've had this question a couple of times from some restaurant owners, and their concern is that they're trying to bring people back and trying to use they've received a Paycheck Protection loan, but they don't have a lot of work for these folks right now. And so their question was, for the restaurant industry, is there an ability to use that funding over a more extended period of time, longer than 8 weeks, when they get back up and running again and they have more things for folks to do?
Yeah, and I understand that. We get that question a lot. It makes a lot of sense for a lot of people in that industry. And so under this law, that's not possible. So for that to change, it would have to be changed by Congress if there's another round of funding for the president to sign. And just the logic behind it is sort of like I mentioned in the beginning. The logic is people anticipate, the Congress anticipated 8 weeks of economic downturn, massive unemployment for 8 weeks. So the goal was to fund these people while they had no work. So the goal was to say, all right, well, we understand in these 8 weeks, we're not allowing you to congregate or come together. So we don't want you at home, not working, not knowing how you're going to feed your family, unable to, live off of unemployment. So let's get you back on payroll while you're at home so that you can have money to feed your family, so you can be able to sustain yourself during that 8 weeks. So then businesses open back up, restaurants start open back up, and they have things for you to do. Then obviously, hopefully that means that your business is making revenue now as well, and you can go back on your normal payroll. That's the thinking behind the way the CARES Act was created for employees.
Okay, to keep them on the payroll as this is going on, and then after 8 weeks, hopefully people would be able to get back to work and they wouldn't need it anymore.
Right. So if people are actually working and the business is open, then the assumption is that, okay, now revenues are coming in. Let's get people back, paying for their employees when the revenue comes back. This is for when the revenue is not there at all.
Okay.
Because we've asked you to shut down as a government at every level.
Okay. One question is, if somebody is trying to apply, they're trying to get prepared to apply, and they need some help organizing their documentation and they have questions, is there anyone other than the bank that they could turn to help get ready for this?
Absolutely. I think that your Small Business Development Center at the University of North Florida is a great one, a great place to go. And I think that, they have a great ability to work with folks who need help. For a lot of folks in North Florida or Central Florida, Urban League is great. That does a lot of good work with underserved communities in this space. So yeah, there's nonprofits that do it, and then there's also your SBDC, like as I mentioned, North Florida. They have been given additional funds through the CARES Act just for that purpose, actually. So you can reach out to them and they can definitely help you virtually.
Oh, that's great. And I know this is a forgiveness question, so I'm not sure if this is something you can. I know that's a little bit more for the banks, but we'll give it a shot. I know that someone has asked about a home-based business. Their business is based at home. So are they able to use any of this money for utilities or for mortgage interest?
Under the proportions that the IRS will allow you to.
Okay. And so that's not related to the Paycheck Protection. That's just a general rule.
Right. It's if you've got a home-based business, the IRS is not going to let you write off your entire mortgage. There's a percentage of which it will allow you to write off. So you'll follow those same guidelines.
Great. Do we know yet if an adjustment needs to be made for an EIDL advance when you're calculating for forgiveness on the Paycheck Protection loan?
No, you just have to make sure that you don't use them both for the same thing. So if you're using the PPP, obviously for payroll, you cannot use the EIDL for payroll. So you'll need to be able to show that you used it for something else.
Okay. And you had mentioned that you talked in the beginning about nonprofits and faith-based organizations being eligible. Is there a different process for them to apply?
No, it's all the same, and language doesn't really change. So they fill out the exact same application. They just have to do it. They'll ask like who's the CEO or something like that, and the lead pastor, whoever is the chief executive officer under their rules, would sign it in lieu of CEO or owner.
Okay. And this is getting a little bit away from the Paycheck Protection Plan, but and if you can't answer it, we completely understand, and we'll get an answer to it. Do you have any information about EIDL applications? Because I know some folks said they were told, they're just trying to see if there's a log, if those are being accepted now, I guess.
Yeah, well, I think, the best thing I can tell you about EIDL is that, the demand there was tremendous. Florida was one of the first states in the country to get an EIDL approved for the state. And so you had a tremendous response there and nationally. So EIDL had more applications almost than it had money. And so what they've done is they've stopped the portal from accepting new people so that the new funding that Congress has allocated will give them a chance to come up with a strategy to see how much of the funds Congress gave them can they allocate to those people that actually are approved. And so while they figure that out, stay tuned to your email inbox. You should be hearing from them on a rolling basis.
Okay. That's great. I think I know when you were talking about transportation costs for the purposes of the 25% in the non-payroll expenses, I think we're having a little bit of sound issues. Do you mind explaining that again one more time?
The 25%?
I think you were talking about transportation costs.
No, that's not what I didn't say. Transportation costs. It may have been a misheard me there. Yep, the 25% can be used for health insurance, for mortgage interest or your rent, and utility bills.
Okay. And what types of businesses are you seeing that are being funded in this second round as opposed to the first round?
Well, I think it's just primarily the smaller micro businesses because they had less of an opportunity the first round. They had to wait 7 days, and because of that, and usually they're the hardest to get their paperwork in a way that banks can understand it, and they're usually underbanked, and they have all these other challenges that larger businesses don't have. So this round, you definitely are seeing smaller businesses. Micro businesses under 10 employees are doing a lot better.
That's great, because I know that's kind of a lot of members that we have that have been asking about that. So it's really good to hear that they're getting some help. One other question that's kind of a technical question. A business owner says if they pay a week in arrears, would the payroll expenses count be based on the day the money is actually withdrawn or on the payroll period dates?
Well, they're going to look at your payroll from this time last year anyway. So they're going to take an 8-week, snapshot and then get an average of that. So that really doesn't matter. They're just going to show what your average payroll is. So whatever your monthly average is going to be is what they're going to use.
Okay. That's great. Well, Ashley, I'd like to give you an opportunity to just, wrap up if you like, if there's anything that our local business owners should know as this is going through, or kind of what you see going forward.
Well, again, I appreciate this. This is just a great opportunity to speak directly to business owners, and that's what we love to do at SBA. We have a great, staff there in North Florida that is willing to and ready to help you at all times. And so if you need anything, feel free to reach out to our district office. They're available virtually. Your small business development centers in North Florida are second to none in the country. There aren't a better set of people that work at SBDCs anywhere in America. So please take advantage of it. They're here to help you. Mike Myrie, who's their state director there, does a phenomenal job, always does. And you have great staff there that are just eager to help. So take advantage of it. All these programs can work nicely together, but just understand these are just tools. And in small business owners, you know what it takes to survive and to succeed. And you have to use these tools wisely. So be expeditious about making the decisions necessary to save your business. Don't wait on it. Don't procrastinate. These funds are running out. I cannot guarantee you there'll be another round. So please be prudent about your decisions and let us know how we can help you make the best choices to save and your business and help you thrive, not only during this time, but afterwards. So keep SBA in mind. Go to sba.gov for more information on anything that you heard me talk about today that you want to get more info on. Follow us on Twitter at SBA Southeast. To keep up with the latest information that we're putting out there. And we look forward to being with you again on the other side of this, talking about how we can get back to talking about all the great things to create prosperity and wealth in Jacksonville.
Yeah, that's great. And I do have to kind of echo what you said, Ashley, about the local SBA office. We've worked with Thaddeus Hammond quite a bit, and he's been phenomenal. I mean, any question that we've had for him from our business owners, he's been able to try and direct them to the right resources, and he's been great. So we really appreciate that. So that'll wrap it up for today. I just want to remind everyone that this webinar is being recorded, and all of the webinars in the Chamber's series are available if you go to the Chamber website, you'll see a box that has the COVID-19 business resources page, and all of our webinars are recorded there, so you can access them whenever you'd like. We are planning on one for next week that'll focus a little bit on reopening efforts and sort of what businesses can, what they're allowed to do, some tips on how to reopen and everything like that, as we're kind of gathering information. So please be on the lookout for a link for that webinar. And Ashley, again, thank you so much for making time. I really appreciate it. And everyone have a great weekend.